Thank you so much. I appreciate that. Thank you for having me here. My name is Renee Mrozowski. I'm the Director of Institutional Services at Leaf House Financial. We are a 338 fiduciary, and I'll talk a lot about what that means. Personally, I am a registered fiduciary with DALBAR certification, and I have about 20 years of experience in the retirement industry, mostly with a record keeper, which we talked about a little bit ago, and the last 3 years with Leaf House. So I wanted to talk to you today about understanding the difference between a 321 and a 338. Both of them are financial advisors, but their tasks are significantly different. Lisa, can you go ahead and advance the slide? Thank you. So we're going to talk about the roles of financial professionals, what their responsibilities are, how they make investment decisions, the benefit of using a third-party investment manager. We're also going to talk about the differences between 321 and 338, how it can reduce your risk as a plan sponsor, and your responsibilities that will remain with you even if you hire one of these professionals to help you. And at the very end, we have an investment management manager checklist that you can use to help you decide what type of investment manager you need, and if the investment manager that you're looking at meets your needs. Lisa? Thank you. So a little bit about Leaf House and why we are qualified to talk to you about this. Leaf House has been in business since 2009. We focus on investment discretionary services for retirement plans. So what that means is we're not personal financial advisors. We're not looking at individual accounts. We're not looking to do financial advising for individuals. We focus on retirement plans. So all of our clients will have a plan sponsor, such as yourself. They will have a record keeper, a TPA, sometimes a 316. We do have a published investment methodology, which you can review, and we're one of the largest national investment fiduciaries in the country. As of the end of last quarter, we had $15 billion in assets under management. We work in all 50 states and Puerto Rico. And we have a certification from an outside party called DALBAR. They're sort of the J.D. Power and Associates of the financial industry. And we'll talk a little bit about why you care about that in a few minutes. Lisa, go ahead and go to the next slide if you don't mind. Thank you. So the role of a financial professional. Their job in a nutshell is to help you with the investments for your plan, but also to help you manage your plan, to provide you with the support and assistance that you need and provide you with the resources that you may not have. Your business is not to run the investments. Your business is to run your company. Lisa, if you'll go to the next slide, please. So financial professionals face some of the same challenges that you face, right? They have to make sure that what they are doing for their clients is scalable, which means they're able to reproduce it in an efficient manner, but also that they are different from their competitors. And of course, decompression is a concern for every industry. Everyone wants to get the best possible deal. And so you want to make sure that you're earning the money as a financial professional that your clients are paying you. It's also a highly regulated industry, and the regulatory environment is constantly changing. And part of the task of a financial advisor is to keep up with those regulations and all of the different advice that's coming from the Department of Labor and the IRS and all of the regulatory bodies that govern financial advisors. And also a lot of them will help you pick third-party providers. Lisa, the next screen, please. So primarily when you look for an investment advisor for your plan, you're looking at them to help you with your investments, but you're also looking to them for things like helping you increase participation in your plan, helping the people who are participating in the plan increase their deferrals, and also helping you decide which plan designs are best for your company's goals. Ways that they accomplish this are to get to know your business, to build relationships with your key decision makers. In other words, your CEOs, the head of HR, your CCO, the owners of the business. It's important that a financial advisor know the goals of their clients so that they can help them advance those goals. And on the participant side, they're going to participate in things like enrollment meetings. They're going to provide participant education or coordinate with other providers for those types of services. And quite often they'll do one-on-one meetings with your participants to help them decide the best way to approach their retirement savings. The entire goal of a retirement plan is to encourage participants to put away money for retirement so that when they come to the end of their work life, they can retire with dignity. And that is your financial professional's role in your services. Lisa, the next slide, please. So we talked a little bit before about the different professionals that will help you with your plan. Obviously, there's the record keeper. As we know, they're going to have the website that your participants log into. They're also going to do the trading, working with the custodian to move the money back and forth. They're the ones who crunch the numbers for you. Your third-party administrator is going to administer the plan, and your investment manager is going to help you with the investments and reduce the investment risk and liability that you face as a plan sponsor. Lisa, the next slide, please. So here are a few of the details of what each one of these providers gives you. We already talked quite a bit about 316, and so of course I don't need to go into that. We're going to focus primarily on the investment manager. Which fiduciary model is right for you? Lisa, next slide, please. The investment decisions that an investment manager will help you make are the QDIA selection. This is the qualified default investment alternative. This is where participants who don't make a selection, who don't choose funds in the retirement plan, but are contributing, this is where their money is going to go. So it's a very important decision to make. What are you going to use as your QDIA? Obviously, they will also help you with the investment selection. Their job is also to monitor the investments and provide you with quarterly reporting on those investments. When a fund change is needed, they will also provide you with a mapping strategy to make sure that if you're removing a fund from your lineup, that you're not leaving a gap in the asset categories that your participants need in order to have a diversified portfolio. Lisa, the next slide, please. Thank you. So what are you looking for? You're looking for value, obviously. You're looking for efficiency, and you're looking for scalability. The value that an investment manager can bring to your plan is twofold. One, they have the financial expertise and experience to be able to help you make these decisions. And secondly, they can often provide you with access to lower cost share classes or collective investment trusts, which are CITs. Those are relatively new to the retirement plan industry, but they can really help you realize some cost savings. They can also customize your lineup construction. And since they are familiar with the underlying investments and prospectus and things of that nature, they can help you with ESG or socially responsible screening. Also, you want someone who is independent. You don't want someone who is tied to a specific record keeper or tied to a specific fund family. You want someone who doesn't have conflicts of interest and someone who can help you mitigate the liability. Next screen, please. So how do you get that? How do you get someone who's going to help you mitigate the liability for the investments in your plan? I'm sure everyone has heard about all of the lawsuits that have happened about retirement plan investments recently. You want to make sure that you protect not only yourself, but also your participants. So next screen, please. Thank you. So what's the difference? So we talked a little bit earlier about what a fiduciary is and the fact that you as a plan sponsor is a fiduciary or are a fiduciary. Your financial advisors are fiduciaries as well as your 316. The part of ERISA, which is the Employee Retirement Income Security Act of 1974, that speaks about investment professionals is Section 3. Subsection 21 and subsection 38 are the parts that differentiate between a non or co-discretionary investment advisor and a full investment manager. That's why we refer to them as 321 and 338, because that's the section of ERISA that defines those roles. Now, a fiduciary has a duty of loyalty to the beneficiaries of the plan participants, which includes, as I mentioned earlier, avoiding conflicts of interest, not using their position of competence to further their own interests, and make sure that you manage the retirement plan and the assets solely in the best interest of the plan participants, and you make good choices about investing the plan assets. That high duty of care requires that a fiduciary inform themselves of all the material and information prior to making a decision, and that you make a prudent decision based on that information. So how are you supposed to do that in relation to the investments in your plan? Because unless you are in the financial industry, that's not your wheelhouse. That's not your specialty. So you hire someone to help you with it. You can hire a 321, which is a co-fiduciary. They make recommendations to you about the investment decisions. They monitor the selections and they share responsibility for the investment lineup. But in the end, if you hire a 321 co-fiduciary, the responsibility for approving those selections and making sure that any fund changes happen reside with you. The 338 is a little bit different. They have full discretion over the fund lineup. What that means is that they can make decisions and enact those decisions to change the funds in your plan without getting permission from anyone. That's what it means when we say we implement investment decisions on behalf of the plan sponsor. So with the 321, they're going to say, I recommend that you do this. And you'll say, okay, based on the research that I have done to the investments that you've laid out, I think it's a good decision. And I'm going to sign the documentation that my record keeper needs in order to make those changes. With a 338, they're going to say, we are going to make this change, and then they are the ones who are signing the piece of paper to tell the record keeper to make the change. Also, a 338 is required to have their own investment policy statement. With a 321, sometimes they'll provide you with an investment policy statement, but the responsibility for making sure there's an investment policy statement for your plan is still on you. A 338 has their own investment policy statement since they do have discretion. And it allows, by hiring a 338, allows you to offload most of the responsibility for a lineup rather than sharing it with someone. Lisa, the next screen, please. Thank you. So the risk reduction for a plan sponsor. If you hire a 321 as an investment professional, you're going to get moderate protection. If you hire a 338, you're going to get the most protection available under the law because they take responsibility for the investment related decisions. Does that mean you're completely off the hook? Sorry, absolutely not. There are still things that you are responsible for as the plan sponsor. If you hire a 321, a non-discretionary co-fiduciary, your job is still to monitor that 321, make sure that they are doing the job that you're paying them to do. Same thing with the 338. Your job is to monitor the process of the 338. Are they reviewing the investments on at least a quarterly basis? Are they providing you with the information? Are they providing the mapping? Are they following through in the case of 338 with those changes? Did they make the changes they said they were going to make if they're a 338 discretionary advisor? If they're a 321, that second part doesn't apply. They tell you what they think you should do with your lineup, and then it's your responsibility to make sure that that happens. Now, most of them will assist with that. They will call or email the record keeper and explain to them what they want to do. And then the record keeper will assist you with the paperwork involved. And a lot of times the advisor will look over the paperwork involved and make sure that it is in line with their recommendations. And then you sign on the dotted line. And 338 signs on the dotted line for you. Next slide, please. Okay, so then we know the difference between 321 and 338. So the question is, how do you select the right one? Lisa, the next slide, please. The first question you have to ask yourself is, which type of financial advisor is the right fit for me and my company? Do I want someone who is going to come to my meetings, talk to my committee members, and tell us what they think we ought to do, and then step back and allow us to make that decision and allow us to debate the merits of their advice? Or do we want someone who is going to say, this is what needs to happen, explain their reasoning behind it, and then take the actions? So do you want to maintain the control over signing on the dotted line to make those changes happen? Or do you want someone else to take that? With that control and responsibility comes liability. So which one's the better fit for you? Also, you're going to want to ask yourself, is the business that this person is in primarily on the retirement industry, financial services? Or is this just something they do because they have other business from me? It's very important that you choose someone who can fill the needs of the investment professional, and also that can provide you with the advantages of someone whose primary business is investments. Those CITs that we mentioned earlier, the low-cost share classes that we mentioned earlier, a lot of those come with size. You have to meet certain assets under management in order to get some of those lower cost share classes. You're not going to have that if that's not their primary focus. The third thing we would recommend is making sure that this person truly is independent. Can they move from record keeper to record keeper with you? If you decide that you don't like the record keeper that you're working with and you want to change, does that mean you also have to change your advisor? Or are they going to be able to help you do benchmarking and due diligence and review these providers and make the decision to move? Also, obviously, you want them to have their own investment policy statement, which clearly defines their role as a fiduciary. And it's also important that they have the ability to customize their plan lineups for all plan sizes. As your plan grows, you want your advisor to be able to grow with you. Next slide, please. Okay, so an investment manager is going to work with you on your lineup. One of the questions you want to ask yourself when you're talking to someone that you're considering hiring is, will they take your current lineup and take the responsibility for mapping you over to a different lineup? And if you're changing record keepers, will your investment professional provide your record keeper with the mapping of the assets? And obviously, that includes the QDIA, which is question number 7. Will they create and execute mapping instructions, whether it is a like-to-like, in other words, one fund A to fund 1, or everybody going into the QDIA and then doing meetings to ensure that your participants have the tools at their disposal to be able to make investment elections. You want to know whether or not they are going to help you implement those fund changes. There's a whole breadth of responsibilities that a financial advisor or investment manager can take. They're not required by law to do it, but they can. You're going to want to ask them, which of these tasks will you take on? Are you going to sign fund change instructions for me? Are you going to review participant notices for me? Are you going to call the record keeper and make sure that they have dealt with any residual dividends that might have hit? Those types of things. You want to make sure that you clearly understand what your financial professional is offering you in exchange for the fee that you're going to pay them. You also want to ask them if they have any current or pending regulatory or administrative actions against them. You want to make sure that they maintain the adequate insurance. Plan sponsors are required to have an ERISA fidelity bond. Some financial professionals also will get an ERISA fidelity bond. They're not required to have it, but they will get it. But they are required to have errors and omissions insurance, and you want to make sure that the amount that they carry is adequate for the amount of assets that they manage. And that will be disclosed to you in all of the, they have an ADV that they have to give you. And if you have a company like Dalbar, which Leaf House does, that will be included in their report as well. Which brings us to the last suggestion, which is that you check and see if your investment manager has an independent certification from anyone outside of their company, an industry professional that will attest to the quality of services that they provide. If you follow this checklist, it will help you make sure that your current advisors are meeting your needs. And also if you're interviewing for a new advisor, this will help you make sure that you get a person who can meet the needs of your plan. Okay, Lisa, next slide, please. So questions. I do have a few questions that we typically will get that I'm happy to share with all of you. I don't see any Q&A questions, so I'll go ahead and share those. The number one question that we are asked here at Leaf House is, if I'm sued, who goes in front of the judge? And the answer varies depending on whether you have a 321 or a 338. Obviously, everybody's going in front of the judge, right? The plan sponsor is going to have to be there. The investment professional is going to have to be there. If you have a 321, they are going to say, these are the recommendations that I made. This is why I made them. The plan sponsor needs to explain to you why they decided to go with my recommendation. The plan sponsor will say, this is the research that I did, and this is why we made the decision to listen to or not listen to the advice of our 321 co-fiduciary advisor. If you have a 338, it's a little different. The plan sponsor will go in front of the judge and say, Judge, I hired a 338 investment manager. I reviewed them. I did my due diligence, and they were independently certified, and they gave me quarterly reports, and they did the job that I paid them to do, and their fees were reasonable. 338 investment manager, please explain to the judge why you put the funds into my plan that you put and why you changed them when you changed them. And the 338 will make their case. Just for the record, Leaf House does not have any pending litigation or past litigation, but that is how it should work. Another question that we get is, can the same person be both a 321 and a 338? So 321 and 338 are different roles. A financial advisor can certainly do 321 services or 338 services for different clients, but typically they're going to pick one or the other. Usually if someone is a 321, they're not going to offer up fiduciary services, but they can. It's not a licensing requirement. A 338 fiduciary obviously is going to have different requirements and different obligations. It's going to be in writing exactly what it is that they're supposed to be doing for you and their fiduciary responsibilities. So you're not typically going to see someone who is both 321 and a 338. The other question that we get quite often is, does it really matter how big of a company my investment manager is with? As I pointed out earlier, sometimes you can get a lower cost share class with a fund company if you have enough assets under management, if you're able to meet their requirements for a lower cost share class. And so, yes, it does matter. Size is not everything. You can get a great financial advisor with a smaller company. But at Leaf House, we leverage our size to help our clients get lower cost investments. And so it can make a difference. Another question that I often get is, how do I know if my advisor provides some of the services like participant education, plan design consultation, helping with third-party vendors, etc.? And the answer is, you just have to ask them. ask them, are you going to provide these services? Are you sitting down one-on-one with my employees and helping them decide how to utilize the investments in the retirement plan? Are you going to participate in our committee meetings every quarter, every other quarter, once a year, however often you have them? And they will let you know. And then you just have to hold them to that. You said you would provide us with participant education every quarter, and we need to make sure we get that scheduled every quarter. Obviously, just like a 316, not all 321 or 338 advisors offer exactly the same services, just like all of them don't charge exactly the same fees. So just make sure that you ask them what services they're going to provide, and make sure that they give you your money's worth. And then the last question that I have that I'm often asked is, how often should I perform my due diligence and reviewing my service providers? Most plan sponsors will perform their due diligence at least annually. The bigger the plan and more complicated the plan, obviously, the more often you're going to need to meet and review things. Some people will look at plan information quarterly. Some of them will combine it with other tasks, but most people do it once a year. And then a lot of people will benchmark their providers. In other words, look at their fees and the services they're providing and compare them to others. Every couple of years, probably every 2 to 3 years, they'll look at whether or not they're still getting a good deal for their money. It looks like we do have one question in the Q&A, wanting to know who to contact for more information. If you'd like to talk to me some more, you can just reach out to Leaf House. Elke, could you maybe provide us information for Definity?